Hello, hello, everyone. Welcome into another episode of Wine Wednesday. Gosh, it has been a
Been
long
a
time.
minute,
Been a long time. I don't know. When was the last time you and Huddy did one? Because I would have been gone for a while.
dude. If I look at the calendar, I feel like we had last week was 4th of July.
The
There
week after,
was a
the week after
Juneteenth.
that, the week after that, we were traveling. The week after that was Juneteenth. The week after that, I had been gone for 2 or 3 weeks because of just terrible timing in Europe. So I'm assuming that's one or two of those is when you and Huddy were on.
I don't remember it. It's how long ago it was. But
Yeah,
we're happy to be here. We're happy to
happy
get
to be
back
back.
into it.
Yes.
Assuming it's going to be a little bit smaller group tonight, so make sure you get those questions. If you got 5 questions, you might as well ask them all.
This is your chance.
Um, but
This
make
is
sure you like
it.
the video as well. There's nothing wrong with liking it if there's just a few less people in here. We got Matthew in here, Feely, Simon, welcome in, welcome in. You know what we do here on Wine Wednesday? We just talk to each other as friends. We answer your questions. We talk about trading. Kind of interesting week we've had so far. I've kind of got a mixed signals from all the traders I've talked to. I know you had a weird start to your week, a weird start to your morning, and then turned out all right.
Yep.
I'm having a great week. I think Huddy had a big green day today. So
Yeah. I was thinking
we'll
about
get
that
into it.
actually. If we want to jump right in before we talk about drinks, I do
No,
want
yeah,
to talk about
do
this
whatever you want.
topic. I was actually thinking about this at the gym, which was right yesterday. If you were in the room, I took three losses that were two were a little bit bigger than I wanted, but they were not disastrous by any means. They were all in the four-figure range. But the problem is, you then add all three together, and somehow I'm staring at a negative 20K day. So it's like, ow, that hurts, combined. But anyone individually, it's like that it happens. And so that's part of, having to accept a drawdown. It's like if you take three, four, five, six, losses that are either average or slightly above average, like how will that look across that little short stretch? And so for those three, I was like, ow, like that kind of hurt 20K. And then today, really busy, also a tough morning if you watched live trading. But as the day went on, if you just saw with the charts that we traded today, all of them worked. I had all winners by the end of the day, and I made like 17K. So I was like, okay, I practically made
Net or after, like back?
net. So like after all the losses, like I am up 17.
Oh my gosh.
Yeah, so quite the turnaround, and not only from this morning, but then also from yesterday. So now I'm only down like 3K in the week. And then I look at the opportunity that's presented itself this week so far, and I'm sure we'll talk about more of that later here. But I was like, gosh, I'm down 3K on a week like this. It's like, ah. But then I also
It
remember,
happens.
yeah, it happens. Because then I also remember not too long ago in May when I got clobbered by FFIE, and following FFIE was like 10 or 20 awesome runners that, long or short, had immense opportunity. And I didn't make really much money there either. Why? Because I was too busy dealing with what just happened, you know, 2 or 3 days ago, which was FFA, my biggest loss of my career. So it's just one of those things where it could be really plentiful, but you make one big mistake or you have a couple mistakes. It just shows how small of a margin of error trading is, because it can literally be night and day, right? Had I not had a couple bigger losses yesterday, and just fine tuned this morning a little bit, you know, like it'd be a whole other world. That's kind of how I feel it should be, because the market's just been really, really good. But also, again, if you catch yourself on the wrong side of one wrong move, like there's short sellers who are gonna have a better week no matter what, because they got squeezed on whether it was Zap earlier in the week or it was
IVP.
yeah, it was IVP today. Like, it just happens. You only need one to really ruin your day, your week, your month, your year, your career. So the margin of error is very small, But on the flip side, there are a lot of opportunities. So that's the good thing to look forward to. And, if you can dial that margin of error in, you got a lot of upside on your hands. So,
Yeah, that's why I always say, like, it does not matter what, if you ask 5 traders what they're doing, like, it does not, their response is not going to tell you how the market is going or what you should be doing, because that's just a representation of where they were at, and if they were there at the right moment, at the right time, with the right execution, with the right size, with the right risk management. They didn't lose big on the one that they could have lost big on. Like, there's so many factors that go into it that's are the difference between red or green on any given day or week. Or any given market, like whether it's super long heavy or super shorts are getting rewarded, patience is getting rewarded, or conservative quick scalps are working. There's so many different ways to look at it, and it really just comes down any given day. Were you there at the ones that worked, and did you avoid the ones that didn't, and did you manage risk on the ones you lost on? And any given day, you could miss plays that work out really well, and your just eyes were in so many different places. Um, but that's why, whenever I hear someone say someone told me the market's so high, I should be making this much money, and I'm not, and I'm really frustrated. Like, that's just BS because, it really just comes down to you versus you. There's so many weeks where there's been two trades in that week, but they're the only two trades I take. And so it's a super profitable week because I just avoid a lot of noise. And there's weeks where there's a whole lot of nothing and I take 40 trades, and that's a problem. And a lot of that comes down to the individual, not necessarily the market. Um, but yeah, we'll get into it. Questions are already rolling in. Nice. I hope you guys are having a good week as well. It is Wednesday, hump day. What are you drinking over there?
So naturally, I've been traveling a lot, and this is the first real stretch that I shouldn't say that. I'll be gone for 4 days in 2 weeks from now. But enough to get back to actually want to buy groceries and then stock up. The one thing I forgot though was alcohol. I had a few bit of Trulies, which we all know we've had a
stash of them.
Enough episodes. I've always overbought Trulies, so whenever I have a party or to get together, I have leftover Trulies. This time I didn't buy any, and I had a couple of friends over, and we drank all of them, so we're gone. The only thing that's left is actually a non-alcoholic margarita.
Right up your alley.
The only reason why we have it is because my fiance loves the company's Instagram page. This is called Mixology, but I think they rebranded to called Smashed. It was like some girl that bet her boss that she can grow their Instagram account to like 500,000 followers, and she like did it. So my fiance bought this to try it, and it's actually like, it tastes like a margarita. I actually can't. I mean, obviously the sting of alcohol I can't really tell, but like
Kyle going like this.
Yeah. Oh. But the flavor, like it's good. There was an old fashioned type. People love the old fashioned. So this is all that I have in my cooler, unfortunately. So cheers.
You don't like old fashions in real life though, right? Like you would never.
If someone gave it to me, I'll drink it, but I'm not gonna.
You'd have a sip of it until they walked away, then you get a margarita.
Your bartender, let's switch real quick.
Hey dude, can we do a trade? Mm-hmm. I'm having a 2019 Birchall Outlook from Western Cape, South Africa. I didn't know they do a lot of winerying over there, but it's a red wine blend. I actually really do like these red wine blends because it's no specific. I'm sure it tells me the grapes, but no specific flavor. It's just delicious. It's just delicious red wine. I know you don't like red wine, but that's what we like over here.
Well, it's hit or miss for me. Sometimes I do like it, and sometimes I don't. I mean, is it very bitter, or is it a little bit smooth?
It's kind of a mix. It's not too sweet. I know you probably go for more sweet.
Yeah, but I can tolerate a non-sweet. Just as long as it's not like insanely bitter, then
you don't really eat any of the foods that you'd want red wine with, like a steak. Like you wouldn't want that. And you don't eat fish, right?
No.
Okay. What goes with macaroni and cheese? Probably a nice a white wine.
Yeah, anything really. I'll down it.
A margarita.
Yeah. Your known pairing for mac and cheese is the margarita.
All righty. Well, if you guys have something, pour your glass up right now, whether it's water, a protein shake, a smoothie, glass of wine, a beer, a bush latte, whatever you're drinking. Let's write some questions in. We'll start getting to them. If we go on tangents, we'll go on tangents. But let's I got chart up on my screen just because I'm looking at stuff and someone just asked questions, so I want to look at charts. Yeah. But we're not gonna show you charts, maybe not, but
there's so many stickers today, I forget probably half of them. So
that's what I'm saying. Someone asked about patterns. I'm like, I kind of want to go through my spreadsheet real quick and look at the charts.
What on earth has been going on?
GJRH says, hello, first time here, new to Four Leaf, got in with the boot camp.
Nice.
Well, welcome. Nice to have you. Thanks for coming to the boot camp. Hope you learned something. That was a pretty long, good weekend for you guys. I hope you took a lot of notes and are enjoying Four Leaf so far. Make sure to check out the video lessons and the archive webinars because far too many people who have access do not look at them. Grant wants to know how you're doing with gap and crap trades this year. Is it worth it so far, or maybe in the long run, not something you will size up on? You can go first since you've been doing it longer. I've kind of dabbled in it, but not professionally.
Yeah, so I started taking it pretty seriously, I think in the beginning of February.
Yeah,
that's when I really. I mean, I had known of them and watched them here and there more. I had watched them more curiously in like December and January, but I didn't really commit to be like, hey, if I'm going to trade them, I have to pretty much trade like all of them, right? I can't just like try to nitpick in most cases. And so doing that, since February till now, I double checked. I actually double checked this like last week. Let's do
The numbers on it, yeah, you sent it
Yeah.
to me.
As of July 5th, I am up 116 grand on Gap and Craps. However, the downside here is my risk reward is awful. It is terrible. Average
To
gain
be
of-
expected.
yeah, average gain. That's partially why I think I've even profitable with them, because generally in a lot of cases there's very wide stops. I'm typically shorting when they've already made some kind of lower low, and so at that point, like the high a day is well over maybe 15, 20, even 30% higher or more higher. Which sounds crazy, but then they all also typically fade, which then gives me 10, 20, maybe sometimes 30% of downside. So my average gain is only just under 4 grand, and my average loss is 4,400. So literally under 1-to-1. However, I do think that's because I do have a couple losses that were a little bit bigger, just from maybe a little bit of revenge trading and over trading them. So like naturally, it's more than one loss, but of course the trade, when you just track it, it's all in one. So either way, risk reward's not fantastic. However, I'm winning just under 70% of the time, like 67%, almost 68% of the time.
That's pretty good.
So that's
for this far into the year.
Yeah. So that's really what the kicker is. It's like my risk reward is terrible. Like let's call it 1-to-1 at best. But we're winning, high 60s of the time. Now to follow up when you're like, is it worth it in the long run? Is it worth it to size up? I don't know. February till July is not long. That is not a long stretch. So it's working for me for now. Because I'm up 116 grand, does that mean I size up on them? I mean, sure. I guess I could, but I can't help but want to, when it comes to the sizing up, want to do it on only the better ones. Because again, if my average loss here is 4K, 4,400, I mean that's literally probably the average loss of all my strategies combined, like all setups. When you average them out, when you look at my monthly recaps or my monthly P&L, it's around the 3, 4, 5K range, anywhere in between there. And so if I size up on Gap and Craps, I have to be then okay with probably bigger size all around, encompassing on everything. And I don't think I'm willing to do that because, frankly, I'm not knocking 116 grand. That's great, but I'm up like a 640. So it's a nice cushion to my year. It is not the main part of my year. So
That's a substantial little extra bit, though.
it's a good bit. Yeah, don't get me wrong. It's just under 20%. It's a very good amount. However, I don't think
it's dependable so far. Like it's a nice to know that it's there.
Yeah, of course. And so, but my point is, I guess if it's dependable and it's something that it's nice there, that's not the thing I'm going to look to size up on. I'm going to if I'm going to focus on sizing up, it's going to be on the thing that's made me the other, 540. And yes, is the other 540 all from one setup? No, it's going to be a mix of them all. But like, if you know me, my first red day setup is my bread and butter. So ergo, that one will be the one I would want to focus up first. Not necessarily the one that I've only been really taking seriously for, 5 months or so. So,
Yeah, I've been dabbling in it very small. I don't really post those trades because it's not really my ideas or my plans. It's a lot of Huddy and Kyle's work that they've been doing. But my results have been positive so far. But it is something you have to stick to. Either right now go for it, or you have to be there every morning paying attention to it because you can't miss any trades. Because if it meets your parameters and fits your criteria, you got to take the trade. There's not a lot of personal bias, and I struggle with that because I have a lot of bias in my life. But in terms of size, it's one of those weird things. Not like a normal pattern because it is cyclical. Like I feel like we go through weeks where they work really good and where they don't, but it's not like the market's like, I don't even know how to say it. 6 months is not enough, I feel like, to just start going, okay, 5x the risk it. And there's no, like with your first red days where you could trade the same risk for a month and then an opportunity is so good that you want to double or triple your risk.
right.
Like for Kyle does, you don't have that in that space. So it's very much a repetitive. The second you change the risk, you change the overall schematics of it. And if you go right when you switch, you go through a losing streak, it's going to really hit that original number harder.
Right.
So
Right.
I don't even know how you go about sizing up in that. It has to be a year-to-year thing, I feel like.
Yeah, I'm sure there's someone out there who's like really mastered Gap and Craps for themselves, and so they do whatever that A+++ is for them. They do size up, but yeah, I haven't been doing them long enough, nor have I really found anything for me personally that would suggest like, oh yeah, like this one, 3x the risk.
Dude, the more I've done Good Morning Nasdaq the last year and spent time looking at the fundamentals, the catalyst, the share structure, the dilution, if you had to tell me to sit down and write bullet points, what an A plus gap and crap looks like, I couldn't even tell you because it seems like the most A plus ones are the ones that squeeze the hardest. Like, look at IVP this week. Like, what the heck is that chart?
Yeah.
And that even has added effective and offering. Like, you see SNGX yesterday, and it's like it doesn't matter how good you like. There's so much uncertainty with day ones that I just, after 8.5 years, cannot put my finger on it. And I think it will forever be a mystery to me. I think that's something I'll never figure out.
Right. Right. I know. I agree. I agree.
Um, Gosh, your guys' names. AO Fast CJ. I know I mixed up letters that should not be mixed up. What pattern did you guys see this week? I've seen quite a few runners. We've had some gap and craps. Let me just start saying tickers out loud. Well, what week is this?
Second week of
10?
July.
I don't even know if we had SNGX. That was a horrible one. We had VVPR.
We've had
LGVN.
Yeah, I mean, I almost want to ask what setup haven't we had yet?
Well, yeah, let's go through the ones I've seen from my setups. ANVS was a multi-day breakout on Monday, I believe, where it broke out at 1250, went to 17s. Let me just go through here. 7-8, 7-8, something I made money on. Siri was a great first red day this week. SIRI.
That was a good one.
Like, it's almost labeled as, it wasn't like an A plus. This is what I say sometimes when I say sometimes it's not A plus, but it ends up being A plus.
Yeah, you
there
would.
The most bounceless ticker.
If you look at, I guess I have a chart. I'll pull it up. If you look at SIRI, was it Monday?
I think it was. Yeah.
Massive red day, but like looking at that chart, I wouldn't have expected a red day from 4 to practically 3.
Yeah.
Full 25% of range. This is Sirius XM. This is a real company. I think a day or two before I shorted this, I was in a car that had it, Sirius XM. Like, they're not a penny stock by any means.
Do those not come in Teslas?
No. And yeah, it's had good red days in the past, but like, there's always some level of stalling out, right? It had like this little weird green day before then it really faded. Same thing with this last run, right? Had a little top day and then it faded. So I don't know, to have it all in one swoop and then on top, not just one big day, but like if you look at the actual action, I mean, it was bounceless, like straight down and then sideways. Very weird. So I know exactly what Dom's talking about, which is like, it was good, but I did not go into that day thinking like, oh yeah, like this is going to be great.
If it hadn't gapped up so much, it would. If it hadn't gapped, if it instead of gapping to 4 had gapped like 5 cents above red green, you're talking about an insane situation where if you're risking 375, shorting 369, I'm actually probably taking like freaking 10,000 shares and making. It was just one of those that worked out like way easier. Like it was one of those where I said out loud like to Randy Walker in the office, I'm like, I'm not covering till I see like a green candle, like because there has not been one for 20 minutes.
Yeah. So we have a breakouts. We have first red days. We just talked about gap and craps.
We had first green days. KOSS was a great first reversal on yesterday.
Yeah. That was the first green day yesterday.
From, I mean, 9s to almost 13. Doesn't get much gorgeouser than that.
We had I guess this was last week, had a parabolic on KOSS last week.
Yep.
We had
you had a parabolic today on KZIA, kind of.
Yeah, this is one where it definitely looked parabolic.
Parabolic plus revenge.
Yeah, parabolic, and then parabolic lost. And I think there was a comment asking if I shorted KZIA today. If you're watching on stream, I did short in the morning in like the 30s. Stopped out for a small loss, but then I reshorted it. At 90 cents in the first parabolic, and then I covered over those highs into $1 when it broke $1, but then when it failed to hold $1, I reshorted because I thought it was still due for a pullback, even though at that point it wasn't really a parabolic anymore. It was just kind of something that I still thought could pull. And then I covered in the low 70s, high 60s, and turned out a profit. So parabolic turned choppy pullback. It's not really great there, but technically that happened.
We had Zap first red day. I mean, 6 days in a row without going red, and then today opens. I mean, significant gap down, but I was kind of prepared for that. I know Kyle missed it, so sorry about that. But I mean, still the pattern was there. And if you're a
There's
long
something
bias
there.
trader and someone who just holds every day for a swing, you couldn't ask for much more than 2 to 20. Um, VVPR, I swung that overnight yesterday into today for a multi-day breakout through 320s. We've had Tesla running all week. It's gone from what 190s to 260s and still doesn't look like it's slowing down. Has it had a day where it's closed red? Is it red today or?
No, I think it was green today. Let's look.
I mean, it's Wednesday, guys, and
Oh
these
wait.
are the A plus quality types of setups
Oh
we're
wait, did
looking
it?
at. Barely
Oh
close
man,
red, or
barely.
it's red
Yeah,
right now.
like right at red green. Interesting. That's funny.
If you're gonna do this, like chill out. You don't have to have a big red day. You don't have to have a big green day. Just go sideways. Like let there be a big breakout or something. Like
Yeah.
this weird, like barely break the previous day's high is kind of annoying me.
Yeah. It's like let me buy
But
you already.
but it keeps me from trade. It keeps me from trading it though, so that's ideal.
Yeah.
But
But
if you
yeah.
pick your spots right, it's weird because I have very few trades this week. I lie, actually. There's how many? 16 this week. If you guys have watched
Wow.
my video lesson for my goals for this month, we're definitely going. It's take the over on whatever my goal was for trades on the month. I think we're not even a third. We are a third of the way through the month, I think, right now. Is it today?
I
I
guess
think it is
yeah, we're the
today.
10th and the 30 days in the month, 31. So we are a
The
third of the
halfway
way in.
point was yesterday, or the third point is today. But yeah. Do too many trades, I guess, but losses are all small. I don't have a loss bigger than $400, and all my gains are 1,700 or more this week. So the plays are there. You just got to pick and choose.
Yep. Um, what?
Where
There's
we at?
Austin asks, was there news in the energy sector today? Why are all these energy stocks running? I think, I mean, we just kind of briefly talked about it. I think it's Tesla. I think that's
Yeah.
the underlying. They're not running with Tesla. It's not like Tesla's the leader and there's just now a sector involved. But I haven't really found anything else besides, the energy EV king itself, Tesla, running massively, and then now there's just a risk appetite for anything, energy related. Unless someone
It's
has,
kind of weird. It's kind of spread its like net really wide because we've seen stuff like VVPR, OPTT follow that momentum. You've seen electric vehicle stuff like Zap. Zap is an electric vehicle company. Rivian is kind of
breaking out, right?
breaking out right now over the 1630s. It's actually kind of a nice slow like versus what we've seen over the last year where sectors come and they're gone in 2 days. This is kind of nice to see it spread out very nice and slow. Um,
And
because
Rivian,
like yeah.
you could argue Rivian is part of that hot sector because they got like a $4 billion investment from Volkswagen. Like they're
Really?
just yeah, that's what caused their gap up from 12 to
Oh, that's
16.
what a couple weeks ago. Yeah,
So like
I
they're
just
just
saw one the other day at church.
yeah, it's just
It was
brewing.
kind of like, eh.
It's just kind of the
Are they selling them?
yeah. I've seen
Like,
plenty of
I mean,
reviews.
are they doing well?
I don't know. I know. I last time I checked, I think their earnings that they released, what was it back in February, was really bad. They were losing money per car. In terms of numbers of
Nice.
how much they're delivering, I don't know. I know multiple
Are they
people.
charging like 300K a car like Fifi?
No, no, they're like I think the starting is like 50 to 70 range somewhere there.
Okay.
So they got them out.
Okay.
They're production. They're productioning. Random
They're
word.
that
They're
non-alcoholic
producing.
margarita.
Productioning.
Matthew says lots of noise today, probably why my head hurts. There's a lot of ticker. Like I just think about over the last 24 hours, like what we had VRPX. What was that other one? Was it VRPX?
That one was
That
a
was a
gapper
breakout.
that I missed
Yeah.
today. I avoided the
You had
spike, but
ATNF,
then never got back in.
ATNF. You had SNGX. You had VVPR. You had. Give me some runners today. There was a V, or there KZIA or whatever, KVIA. That was
Peggy,
there. Peggy was
PEGY.
moving. IVEP. There was a lot of noise today, and these days are the days where some other mentors and people will say, "Market's on fire. What are you doing? How are you not up 100K today?" And I'm like, dude, there's a lot of people, especially beginners, who the more you throw at them, the worse they're gonna do. And that works for me a lot of the time too, because I actually thrive in markets where there's like 2 trades that week that I really, really want to hone in on, and I do well on them. And then I'm either wrong and I lose 2R, or I'm right and I make a 5 to 10R week. But when you have this many charts in play and you're not like on point and doing really well, it is so easy to go to the next one and revenge trade, go to the next one, revenge trade. And I'm glad I didn't do that, but I definitely understand that for people who say that there was a lot of noise. There's a lot of stocks and a lot of people, like even our room, a lot of people trading a lot of different things.
Right.
And it's hard sometimes to stay where you belong in your lane. We always say stay in your lane. It makes some memories.
Make some memories.
B. Lee says, I'm having trouble trading penny stocks. I was profitable in the OTC market. Dom, do you still look at the OTC market? I have my sixth or seventh eye on it, usually. It's got to be pretty good for me to want to trade it. I mean, most recently I did quite well in DEFTF. That breakout
Yeah, that was a good
over
breakout.
175 went into the twos, and then I also nailed the first red day. I think Kyle did too, from the 230s down to the 150 area. I think Kyle played that first green day as well.
I tried, yeah.
Besides that, the only other one I think I've won on is Fannie Mae this year. All the other ones, it feels like they break out, they look good, and then 4 seconds later they've dumped 80%, and I'm like, how is this even possible? So the moral of the story is I don't really look at those OTCs. They have to come to me, and they have to be really good in terms of like volume and catalyst and daily chart. But it's not like it once was. Gosh, do I wish it was. I think we'd all be a lot richer if we still traded OTCs because that's all we needed to trade, and we didn't need to come over to this listed stock stuff. But my advice for switching over, if you're having trouble making the switch, I don't know what Kyle would say, but for me, it was just like, don't switch it up too much. Look for the same type of patterns that you were trading on OTCs and just learn the way that small caps move, the listed stocks. Like there's a lot of differences in the way they move and the speed in which they move, the way the level two looks. Executions are pretty instant. Swinging overnight after hours and pre-market's a headache if you're used to gapping stuff and not worrying about after hours and pre-market. But for me, it was like just morphing the multi-day breakout from OTCs into listed land and finding out which ones fit the pattern and ended up actually working out and how I wanted to create plans to play them. Which ones do I want to swing? Which ones do I want to sell 20, 30% past the breakout level? And just slowly doing that. It took me 9 months in 2019. I went through a dark period where I didn't make any money because I was trying to learn listed stocks. But it can be done. It takes a little bit of determination. It's a lot like getting profitable for the first time when you learn this new market because they are so different. But that would kind of be my main things to look for. Don't switch it up too much. Kind of morph your patterns that you already use into listed stocks.
Yeah, I'd agree. That's definitely the best, I think, route. Obviously, we don't know what setups you were trading in the OTC market, but they still happen. They just happen differently. They require, I think, naturally a little more patience on the entries, a little more better risk, or not risk, trade planning to kind of stay in the trade and not chop yourself out. You know? So yeah, if you want to be more specific,
Yeah, those are big ones. Entries and risk levels are so easy in the OTCs. I remember,
yeah,
like,
they're pretty much
in the
like
way I
one and
traded
done.
DEFTF. I remember telling my brother, I'm like, you don't understand this, but this is how they used. There used to be one of these a day, like where you just get a morning spike sideways, and then a perk into the close, and you just buy that and risk like a penny below your entry. It's gonna gap up the next day. It does the same thing until it stops doing that. You just
You
continue
just keep
doing it,
milking it.
and then you short it the first, and then you buy the panic. Like those were the days. Like it's hard. That was a long time ago. Like in my mind, like I remember that's like 4 offices ago, but they were so simple. Like once I figured out the way they worked, and listed stocks are just not like that. There's a lot more
More
wider
nuances.
risk. You got to stay in the trade. The behavior of the stock, the dilution matters a lot. I mean, when you're trading OTCs, everything sucks. In small caps, everything sucks, but some suck a lot more. And so you have to kind of figure that out. Like, but it can be done. It can be done.
Yeah, take some time.
Um, Kyle, I'm saying Kyle because I see all shorting patterns. What are the main differences between first red day, overextended gap up, and overextended gap down?
Depends on who you ask. There's a bit variance in some of these. So first red day, well, I shouldn't say that.
I can give you the definition of each if you want.
Yeah. If you have simple ones, you give the
Well,
simple
because
ones.
first red day, because I actually have these in my patterns. Those are my patterns when I write them down. They all first red day and overextended gap down go in the same category as first red day because you're shorting stock when it's red.
Right.
First red day is a stock that you expect to be red like soon, or it is already red on the day. So overextended gap down has to be red on the day, and it's gap down for the first time. And the overextended gap up is the big difference because that's the one that's up 50+% when it's already up from 1 to 7 and it's gapping to 12.
Right.
That's so the other two, I think you're shorting while it's red or right above red. The other one, you're probably covering while it's green. Now you can go into the differences if you want more strategic.
I was going to start with the same way of like an overextended gap down is a first red day. It's just in the way it happens, which is in this case, it's gapping down. However, if it's not gapping down, well, then you think, well, isn't it an overextended gap up if it's gapping up? And no. I'll call something a just traditional first red day if it is opening up slightly above red green, but is not gone red yet, right? So it's something
Kind of like Siri, SIRI.
Yeah, SIRI, perfect example, right? Red green was like 360, it gaps up to 390, opens at 390, pulls back, and before you know it, it's at 320, right? It was open green, but it sold off red. That is the traditional first red day. An overextended gap up is
like Longeveron today.
Yeah. Wait, no, that was LGVN is like a typical grab and grab.
It is, but it did go on a 2-day run before that.
I guess you're right. I guess technically it could be considered that. Overextended gap up is one that, yes, I will still look to short for a red candle, but it will not be a red day. It gaps up so much, and it's not gapping up 10 or 20% like Siri, right? It's not gapping up so slightly that it can still go red. It's gapping up so much that it is extremely unlikely for it to even touch or go red. And even if it does go red-green, it actually ends up being a form of support. I can't tell you how many times I've seen traders, and even myself, make this mistake, where if I'm shorting something it's day one, it goes from 2 to 3, and then day 2 it goes from 3 to 5, and then day 3 it gaps up to 6, like a massive gap up, but the run is started from $2. And naturally, most can't hold it up, so they fail, right? But I would be shorting.
Yeah.
What's up?
It's like Zap yesterday if it had not squeezed out.
Yes. Exactly. And so Zap had pulled to previous day's levels, and it wasn't even close to going red. Sometimes they go red, but if they go red, that typically is actually a form of support because it's sold off so much that instead of continuing to sell off, anyone who's selling is already sold because they see it going red, and then it actually bounces and closes green on the day, but it's a red candle. So it's a different nuance there, but that's kind of where it's like, maybe you're considering it. You're asking that question with categorize what the red is, because yes, it is a short pattern finding a top in a run up, but typically the day will actually end up green, but the candle will be red. So there's a main difference there.
It's kind of new. You didn't hear a lot about it when we were learning and trading. Like I don't remember hearing it till like 2022 or 3, when I think it started to become more of a pattern where stocks weren't running as far. Like I feel like back in the day, they would go without going red 2 or 3 days, and then you would just have the first red day because they never really died on the day they gapped up. They just opened right around the previous day, then went red. Yeah. And then it became so normal for a stock to go on a big day 1 run, a big gap up, like Nikola last summer, and then fade all day. And so it kind of came out of nowhere. It's trickier to play. Like Kyle said, I think treating it more like a gap and crap is probably the most profitable way to do it, because there's no guarantee. There's so many times, like a Zap yesterday, where that one ended up squeezing out hard, but where just nothing happens on that day. Like you either get a significant move down to green red, or you get nothing, and you're just kind of stuck. And then it sometimes can wear you out for the actual first red day.
Right. You think it has to go down, but it's not. It's just not ready yet.
And then, but yeah, exactly. And I think what I've been thinking is like, I think I might throw that pattern out for me, just because like I did it on MBIO. I remember recently, and it worked out really well. But like the times it doesn't work out really well, it's kind of just really annoying. And like that one wasn't even an overextended gap. It was an overextended gap up because it technically has to be, because I'm not expecting it to go red. But it's like that wasn't a huge gap. It spiked a lot from 90 cents to $1.30. Mm-hmm. But just waiting for them actually to go red, like Zap today, I had so much confidence, conviction after I think losing $100 on it total in its entire 6-day run. And then just knowing like, if it's your first real attempt on something and you're like, this is the first time it's red after 6 days, I have a lot of confidence, conviction, and if I'm wrong, I lose one time on 7 days of movement, and there's a good chance that when the stock's actually red, it should fade. And so I've been thinking about just only taking shorts when it's actually red on the day, or right around red on the day.
It's a very safe way to go about it, for sure.
Just because I'm not a professional short seller like you.
Well, even then, I've taken many trades where I will attack something while it's green, take a bunch of losses, and then I just look at myself and I'm like, Kyle, just keep your hands to yourself and wait for it to be red. Like it will be so much easier if you just wait till then. So
you miss a lot, but it does. Even the ones where they are overextended gap up shorts and they work that day, there's usually still plenty of meat on the bone for the first time it's red. That's the funny thing. And a lot of people chop themselves up on the first day.
Yep. Oh, 100%. Let's see. I lost track. Where were we?
Yeah, let me look. I think I missed. Oh, someone retracted a message that I was going to read next. What are you guys retractioning? Weeks like this, it's a stop out shit show. How to avoid that and be even more specific and max daily loss. Weeks like this, I don't know what perspective you're coming from. Long bias, short, but stop out. I feel like it has to be
Electro.
short bias. But if you want to
My yeah. Yeah, feel free to elaborate, Electro. But my interpretation, let me know if I'm wrong here, is that there's just that many opportunities like we talked about, and so naturally everyone in there under the sun wants to take all of them if they can. And naturally, if you make the wrong trade plan for all of them, you're going to get stopped out way more than you naturally would, right? And that's the biggest thing that I think unprofitable traders need to realize. And not necessarily, I don't know if Electro's profitable or not, but
throwing shade, huh?
no, you can be unprofitable. And while you're in your learning curve, you see a new environment, right? All of a sudden, you're only 6 months in, and you see an environment where all of a sudden, instead of having 5 stocks on your watch list, you have 15. You're like, holy crap, there's so much to watch. It's like a mental shift. Now you think that like your unprofitability changes. So you go from trading 1 or 2 stocks a day to trading 10 because there's just that much more, and you lose 5 times more from losing on 2 versus 10, and you're like, wow, this sucks. It's like, yeah, because you didn't change. The market did, but you didn't. You're still unprofitable, right? Even if you are profitable, like I talked, I'm going to sound like a beating a dead horse, but it's like we talked about in Good Morning NASDAQ this morning of like, I already felt it before the market even opened. I already felt there was so much going on. I'm gonna make way more mistakes than I want to, and I'm not sure. Like I didn't have enough time to prepare.
There.
What's up?
It was a self-fulfilling prophecy.
Yeah, it's like I didn't have enough time to prepare myself and really dial in and how to avoid those mistakes. And so, ergo, like Google, please go watch this morning's stream. Like the first 5 minutes,
you were like,
the first.
I'm definitely gonna lose on this one. Let me short it real quick. Yep. Well, look at that. It's gonna break 10. I'm gonna have to reshort it again. Oh, now I missed this one. Look, I missed KZIA.
Yeah, I was like, like as I'm taking a loss to my left, I'm losing, or I miss a trade on my right, and then I get in on the right, and then I lose there, and I miss a trade on my left. It's like it went back and forth like 3 or 4 times. Where like in the first 10 minutes, I was down like 3 or 4K immediately.
They don't understand what it's like trading while streaming, while answering questions at the open, whilst having, I don't know what type of screens you have when you're doing the stream, but I have a lot of charts up normally, and I don't when I do the live trading stuff here. Mm-hmm. It sucks.
So, anyways, to the question, how do we avoid that? You got to dial in, right? Just because whether you're unprofitable, profitable, just because there's 15 stocks on the watch doesn't mean you got 15 stocks to trade. You got 5, right? Narrow it down. But you got to be okay with missing the other 10. You just have to be, and it's going to happen. But if you can really dial in and nail the 5 that are best working for you, you're going to avoid the ones that probably stopped you out, and you're going to really do well on the ones you were focused on. Like, it's perfect today. Yes, I made 17K, which is great even after the losers. I'm really happy about that. But every single one of my winners, like none of them are over 5K. I think the biggest is 5K. So it's like I had to win like 4 or 5 times in a row to get to 17. I would have rather only traded 3, but really focused, maybe even sized up on them, because I would, I could just focus on the price action better than just shorting it once, never looking at it again, and having to watch 7 other tickers, right? I feel like there's a world where I actually could have made more with trading less, right? That's usually the case.
It's always the case.
Yeah. And then in terms of max daily stop, I mean, you got to figure out what that means for you. Like if you have a I don't know, a $10,000 account as a beginner, like you probably shouldn't be losing more than, I mean, this is true for any trader, any level. Like you shouldn't be losing more than 5 to 10% of your account in a single day, in my opinion. Some people like doing it like your average gain. So if your average day that's green,
daily gain, yeah,
daily. If your average daily gain is $100, you shouldn't give back more than a full week or like 3 days. So if daily gain is $100, you shouldn't give back more than $300 to $500. Some traders like doing that, and it's a good way to do it, because then you'll feel confident that I'm never going to give back more than a week max, in losses, because I'll cut myself off, or you'll have your broker cut yourself off, right? So that's another.
So on something like Fifi, you're not supposed to lose like an average month.
Yeah. Oh yeah. Yeah. We have things in place now that it's almost impossible. Not, I shouldn't say impossible. Max stops still don't work in after hours and pre-market. Scary, yep. But we put more things in place to prevent
ridiculous,
that from
but Dom, can you go over what you look for in a first green day? Also, would you consider Zap tomorrow? Do you have your chart still up or no?
Yeah, I can pull up Zap. I can pull up
Um,
my arrowless chart of Zap.
Arrowless.
Yeah,
Yeah, I got some arrows on it. They're gorgeous arrows.
you did great on it
Um,
today.
it looks so good. I should freaking take a picture of it. From trading in bed at 4 a.m. to the covers and then the ads and it
I
was perfect.
I I feel dumb. I for whatever reason the entire span of midday where it actually bounced to 12, I like didn't have a chart above it. I just took it off my screens, which was so dumb because I just can't help but think I would have tried. Because if it's not going to
You
squeeze
would have
out
done well
midday,
because it never really had a bounce worth scaring you out.
yeah, exactly. I was looking
You
for a
would have
bounce
done
like
well.
this or a bounce that would have gone to new highs, squeeze everyone out, and then fail. But like a perfect in the middle, like that's it's right there. But anyway,
It's often what you see, I feel like, too, on these overextended gap downs. Everyone and their mother is waiting when they're too big of a gap down. Everyone's waiting for the spike to red green. And if it doesn't happen, it just goes lower.
yep,
And so no one's there. So it's like not crowded at all. And
it's just
you
long
just
selling.
get the selling.
Yeah,
Yeah. And it's kind of nice. Um, for tomorrow, it's theoretically, what did it go for? Oh, yeah, it is. Went from 2 to 20. It's a reversal watch. So for me, and you can watch a lot of my video lessons over at Clover if you're four leaf. The differentiation between my first green day and Gratani's reversal, I've kind of mixed the two because so many people have seen that and it's basically the same pattern. But for me, first green day has multiple red days after an extended run, and reversal has is from in my opinion just one day of one red day after a 300% plus run, which Zap does technically fit and KOSS technically was. If you look at cost, it went from 4 to 19 and then had that second day there's not a red day, that's a green day, and then one red day following, and then the bounce came after that because it still was, basically 50% off its highs. So Zap would fit in the same category as cost did earlier this week. I really kind of hope that it goes lower because it's such a big bodied perfect green candle, I mean red candle today, and oh my god, these charts suck. And because it's kind of gapping down, like it's making new low day in after hours, so there's no base. It's been really fadey. So I'd rather come down into that 6-7 area resistance
I'm
or
nervous.
previous and then like go sideways there. But the pattern in and of itself is just what you see on COS or ZAPP. Stock goes on a really big run, squeezes out shorts, a lot of eyes, a lot of volume, a lot of interest, ideally a multi-day move, tops out, and then initiates backside. I think Kyle did a whole presentation on backside for the online boot camp. And, understanding front side and backside things really important. But once backside's in, like Zap right now, I'd give it a 1.4% chance of breaking 19 in the next 6 months. I don't think it's very possible. It looks like backside's fully in. We are over 50% off the highs just after today's first red day.
Right.
And so the further we go, distance ourselves from 19, the better I think the bounce is going to be, the more range there is. So that's why I prefer it not happen tomorrow. But then I'm just looking for a nice, clean, slow fade, sideways price action, and then the stock to go green for the first time. For a first green day, if we have multiple red days, it's just like the first red day pattern after multiple green days, like with Zap, it's an opposite. When you have multiple red days in a row without going green, I'm just looking for it to go green for the first time, probably open just either barely red, barely green, and either go green or hold green, and then either a 5 minute high break, which Cortana talks about in trading tickers too, or some sort of ABCD, something where I can risk low a day, get a good average, and then look for a 20-30% move off of those lows. But it's really just a reversion. Like it's a quick bounce. It's the last play I'm looking to buy while the stock's relevant. And it's one of my favorite patterns because it's so easy to spot. So much has to happen before it comes on your radar as a reversal or a first green day. Like Zap, you would have seen on, if you didn't see it the first day, you would have saw it the second day. If you didn't see the second day, you would have thought third day, fourth day, fifth day. And now after this first red day, now it's on watch. And so one of my favorite, it's just basically the first red day in reverse. And it happens because stocks don't go straight up and they don't go straight down.
Bingo.
Is Tim Grattani in the chat? That can't be really him. I guess no, who would really copy his name, right? But I guess there are people out there. He says, yes, I'm not one of the fake Bitcoin scammer ones. Don't worry. I trust him. Purple is a good color for him.
Right on. What's going on, Tim?
As we're talking about him,
Right? Look at
he
that.
heard his name.
That makes me, gosh,
Okay, it is him.
yeah.
Wait,
I
whoa,
was about to say
whoa.
we should. I was
You
about to.
didn't beat me in poker in Maine. Might have beat Kyle.
I don't remember. Probably. I'm not good at
You
poker.
were already sitting watching a movie by then, Kyle.
That's true. I did. Yeah, I probably got out early. But that makes me think we should do another poker night too. That was fun. It was very fun.
We should, in honor of the World Series of Poker, meet up and do a poker tournament in person.
I mean, I really enjoyed Traders for a Cause poker tournament because
That is fun. It's fast paced.
yeah, I'm
Yeah.
not
Kemper,
good.
I think, got like fourth or fifth. It was crazy.
Yeah, I'm not good, but I made it to 13th, and I was like, how did I get here? This is great. At the second table, second to last table. I was like, this is sick.
We need to have Gritani on. He was at the round table for the online boot camp, and it
Yes.
was awesome. Got a lot of good questions answered. All right, continuing. Chive says, going with Tim's theory of shorting being too overcrowded. I'm guessing that's Sykes, not Gritani. Do you think that what separates a profitable short seller from an unprofitable one in this market is a matter of obeying stops and being selective? I think that is the process for any profitable short seller in any market.
Right.
But what's your answer, sir?
Yeah, I'd agree with that. It's not just for short selling, and this is why I mean, yes, short selling is risky, obviously, but like I can't help but think there's an over emphasis on short selling, and no one looks at it on the long side. Like you do, like everyone's like, oh my god, short selling, you'll blow up, and yes, that's true. But do you know any bag holders I've met?
You've been a bag holder.
Like I've been one. I know one. It's me, right? Like I have met so many people who are like, "Yep, I bought this stock at 5 and it's at 10 cents now, but I'm waiting for the one day it's going to come back." Like it's risky everywhere. Yes, there are bigger risks than others, but like having a good risk level and respecting your stops is like the name of the game. It is not a short versus long thing there. That is like literally the only way you're going to be profitable, right? In terms of what was the second part of that question?
Obeying
like shorts
stops
being
and being
crowded?
selective. Oh, the first part was yeah.
I
Do you
think
I guess do you think it's overcrowded and
I only think it's overcrowded if you're in the one ticker that everyone else wants to short. Like at the end of the day, short sellers are human beings like everybody else. And so, you know, sometimes it's like flies on poop. Like literally every short wants to be a part of a certain stock. And like IVP, literally IVP did an offering at $1. And this is how I can almost not I can't prove it, but I'm almost like fairly confident it's short sellers that caused this move. Because
it has to be?
if we go back
Who's buying it?
to when they did their offering, you barely see it.
Gertina probably bought this at 311.
It was trading at
Probably bought the high daybreak at 450, honestly.
that was a good move today. But trading in the mid twos, pulled out an offering, so they're doing 6 million shares at $1. Except that the offering wasn't going to be live until I think a day or two later. So this drop here is not the offering. This drop is either long selling or shorts hammering it. Because I don't think it was on SSR, if I'm not mistaken. Correct me if I'm wrong, but I don't think it was. So anyone could get into this easily if you're short. And this was what? 300,000, 400,000, another 400,000. So like well over 1 million shares traded in just these 3 candles. And don't get me wrong, I know this low flow, I don't think there's that many shorts available, but if there even is a fraction, 10%, 20% of this volume is short selling, like, I mean, it just doesn't shock me that this thing now is at $6 later. Now, obviously, it's not something I would have longed.
So I went to 950 first.
9, which is crazy. But this is a classic crowded short name to me. Because they did an offering at 1, everyone's like, it has to go to 1, why isn't it at 1? And everyone starts shorting, and it just goes higher and higher and higher, and then it just keeps feeding the digging, the stubbornness, right? Until someone gets margin called and they can't short it anymore, which probably happened to somebody today at $9. It's sad, but I almost 90% sure it happened to somebody, unfortunately. So it's all about what ticker is crowded versus something like cost today. Costs, we'll go back to the ticker. Costs, there was no shorts here. Nobody was home. Just is going to fade. Same thing with Zap. Yes, there were shorts on Zap, but like Dom said, there were so few that it did nothing but just sell off. Like there were more longs that took losses than it probably shorts were in this today. Because it faded, I mean, it's down 40%. It's down 50% off its highs. Sorry, 50% just in today. Not to mention off its highs, which is slightly higher than yesterday's close.
Yeah.
So stuff like that.
Yeah. Overcrowded is such a weird word because you don't ever really know for a fact one way or the other, but I mean, longs can be plenty overcrowded as well. The only thing that shorts really have going against it is that you can lose infinite versus 100%, and
Right.
that's the big problem. Or you don't even have to be that far gone before a broker buys you in, or we've all been bought in on pumps before, right? Where you don't want to cover and you're okay with the risk, but they're not, and you still get stuck in it. I mean, get taken out, but I think shorting is dangerous for a lot of people. I mean, I've seen more in my career that with the friends I've met and the people I've seen trade lose a lot more money shorting than longing. That is true. And someone else also asked, do you have to like event? And it was kind of what we got during the online boot camp. Someone asked about short selling and if you have to eventually go to short selling.
Excuse me.
But
We
I
actually got
don't
this
see
question,
it.
I think, at the boot camp in June, which is
Mm,
the answer was no. You know, you really don't have to be a short seller to be profitable.
no, I think there is less risk to the as a long buy trader, but you can. I mean, wait, my biggest loss ever is a long. I think. Yeah, IMUX I think is my biggest loss, and that was just because bad news at 4 p.m. and my stop didn't go off, and I was didn't get stopped out by a penny in regular market hours, and then 4 p.m. it went down 80%, and just happened to be
Ouch.
one I was sized into.
Right.
But you can lose plenty. Offerings happen, bad news happens. That ICU we were talking about in the webinar yesterday, Kyle, which I
Hmm.
made good money on, opened up today at 8. Like
Wait,
if
what?
I hadn't gotten out of it yesterday, like you don't like there is so much that can go wrong on both sides of the equation that there's no, oh, shorting is way more dangerous than longing because it
Right.
depends on your positions and what you're willing to do with them.
There's because yeah, and that's the natural. And there's truth to it. I'm not saying short selling isn't risky because totally you can technically and physically lose more than you put in because it can go against you. On the flip side too, and I see this a lot in crypto. I don't know why. It just doesn't make any sense to me. People will leverage like 50 to 1. Like they will go in so big and then get margin called because they're like if you're leveraging 50 to 1, I think you only have what 2% of downside. So like if the stock goes against you 2%, you're like, yep, like you're done. We're gonna call you in. Like and God forbid there's a scenario where the broker or the exchange that you're with can't even get you out at 2%, and then they get you out at 4 or 5%. Like then you owe your exchange money. I don't say that. Obviously, I'm biased. I'm a short seller, so I don't mean to take away the risk of short selling. But like, if you are reckless enough, you can screw up anywhere.
You really can. You can
So
blow up as a scalper if you want. Like anything can get you there.
yeah, yeah.
Um, let's see. Someone asked how many screens are you using on your trade station? I have 5.
5.
You have what,
I
like two
have
laptops, a regular screen? You have a weird setup.
Yeah, I've got a different setup. I've got 2 laptops, a MacBook to my left, which is like where I will track my trades, emails, sometimes Discord on the left here, more life stuff. And then this laptop in front of me is like my trading laptop. It literally is pretty much only made to have trading software on it, which then connects to I have two 32-inch monitors that have all my charts up. And so yeah, I've got like this 4 screen situation, but all the trading happens, left and right of me, in front of me right here. So
Get yourself some screens. Don't let anyone tell you that you can do this on a laptop. There are very few people that can, and you better be real selective because you're going to miss a lot if you just have one screen
yeah, if you're good at
and one chart
selectivity,
all day.
you can definitely do it. But you got to be like, you got to, because I'll do it from my phone, and I really can't trade more than 2 things on my phone. But
Dude, I
like,
was stressed this morning when
yeah,
my power went out this morning, and my laptop was all bugged with viruses, and I was like, I cannot do this from my phone. Like the DOS charts suck. I don't have Thinkorswim right now on my phone, but I was like, I don't know how people do this from their phone. Like I don't want any part of this.
yeah, you got to be selective. So
True. Let's continue. Oh, there was the.
Gratani had IVP at 390, but missed and got stopped out by a penny. Oh,
If you're still here, Gratani, were you buying the after hours or pre-market highs, like that little wedge into it? What ticker was that? IVP.
IVP.
Because I just saw that for the first time when I had after hours on, that there was a real nice little multi-day breakout setup over that 385 to 390 area. Yeah, that's all I really see at that area. Let's see. Everyone's saying, "What up, Gritani? He is the legend." If you guys don't know, at clovertrain.io, you can go check out Gritani's trading tickers 1 and 2. It's on sale on our website always. And you can go check it out right now over in the shop. It is the Bible for at least me and Huddy. I don't know for Kyle if
Oh
it
yeah,
is or not, but
watched it multiple times.
all of it's the reason that I know exactly what a breakout is. And when someone asks, I know exactly how to explain it. I learned how to risk with him. I learned how to not lose, how not to fight stocks too much in those. And in Trading Tickers too, he has a ton of new strategies. A lot of but that overextended gap ups in there as well, where he's shorting stocks that are extended while they're green. So if you haven't seen that, check it out. You can get it at clovertrade.io.
So funny. One little story I want to tell while Gratani's here. I'll never forget the first time I watched Trading Tickers, and this was maybe late 2016, early 2017. And I remember the chapter of Gratani was it your I think it was your shorting lower high setup, right? So like anything that was overdone or overran. The first time I had a lower high, you short it for a pullback, and I remember there was one particular trade that you took, and it was like you shorted it and then didn't respect your risk, and then went against you, and then went against you, and then you lost like I don't know somewhere in the 20 to 30K range. And at the time, I have like a 6K account. So to me, I'm like watching this like with suspense, like, oh my God, Gratani cut it. Like, how could you do that? Like, like I'm living it as if it's my money. I'm like, no way, I can't believe it. And it's just so funny thinking about that moment, like 7 years later of like, no, I know exactly what he was going through. I've been there all the time. like I know exactly. I know exactly how you get in that position. It happens very quickly. It's just so funny as a beginner.
That's why I really think people need to learn from the big losses that we've all taken because that's what did it for me was watching him just like sit there and not cut a loss and not cut a loss and not cut a loss and then have to explain it and then be so vulnerable and put it out there. Yeah, we talked about was it the webinar yesterday or in the room today? Yeah, people need to learn that lesson. And if you're doing it with a 6K account and you're watching some guy lose 100 grand when he doesn't need to, when he's trying to risk 5K or 10K, it should get the point across.
Right. Yeah, I remember what you're saying. I was saying earlier. It wasn't live. We were chit chatting a bit afterwards.
We talked all day today.
It was just that busy.
Yeah.
We couldn't stop talking. But yeah, you can see any one of us now take a big loss, right? You can see me lose nearly 400 grand on FFIE and think like, obviously you don't want to do that, but it's almost like a monkey see, monkey do. You see me get away with it, so I think subconsciously a lot of beginning traders, they don't intentionally go and like, I'm going to lose as much as Kyle did, but like they can clearly see like he got away with it, took the loss, and now is right back, right? I'm relatively right at my highs where I was before FFIE, thankfully. That recovery happened quicker than I thought, but like you have to understand, my first 3 years, I didn't have any losses even remotely close to that magnitude. And I don't mean by P&L, I mean by like a size of how much money I can even afford to lose, right? My risk management was so like on top of it early on because I knew if it wasn't, I wasn't going to make it. Like I knew I didn't stand a chance if I didn't. And so when a beginner trader like blows up their account completely and has no money left, it's like that's the worst thing. You should be coming in every day with the goal to avoid that scenario, right? I know everyone goes into like wanting to make money, but like that is your number one, is that level of defense. Like I will not lose this large amount of money. You kind of have to be willing to lose it. Like again, most accounts blow up the first time, whether it's by death, 1,000 paper cuts, or by one big loss, but like your goal should be to minimize or protect against that. Literally, like that is your only goal, in my opinion, for the first year. Just to get used to just being in those pits in that war zone of this what we call the stock market and like surviving. Because people who don't and lose too much, they're gone. It's sad, but they're playing a game of poker and they lost all their chips. They're out. So anyway,
I agree. And I just posted the link if you guys want to check out Trading Tickers 1 and 2. I watched it last week, Trading Tickers 2, just to look at some Doji Day 1 stuff. I don't know if I've talked to Tim about if he's been redoing the data for that, but I'm actually
I
swinging
don't
some
think.
LGVN because of that, just to see. Um, but it is a great
Oh,
watch. It's so easy. It's such a great DVD. Just watch it. Let's go through a few more questions. Do you have time to go through a couple minutes extra,
yeah.
Kyle?
Let me
Just we
also.
haven't been here for a minute.
I'll put the link in because I don't think the link went through on the.
Mine didn't.
No, let me. I'll put the link in for.
It looks like so they just hide it from you guys and not me because it looks like it's there for me.
Yeah, you can see it, but it's not.
They want me to believe it's there.
Yeah. Let me. Where is it? Let me find it here. Why am I struggling to get it on the website here? Let's see. There it is. No. Anyways, keep asking questions. I'll put it in there.
Uh, is my camera not working?
It did turn off. Yeah.
Second.
Oh.
Uh, hmm. There? Okay. Um, yeah, Gratani, I don't know. Yeah, bought the 390 break this morning. Then that dip almost got me. Sold out 550 and 770. That's pretty good.
Nice.
770 is actually to continue to hold through because those are some good squeezes. I wanted to long. I saw earlier in the week, IVP, that once it did the offering and you see that wick right to the upside, and then the next day, but the next day through 311 was so crap, and then this morning you had to just be, I feel like committed to the idea. I'd like to hear his words about it one day. But that one, that's a nice trade though, and it makes a lot of sense, like in the opposite theory of shorting there, because it's again one of those things where you would think the odds would be stacked in the favor of it going lower, but it turns out to be a great squeezer. And for those reasons, it becomes a great long, but it's also kind of a multi-day breakout. Um, with playing breakouts, do you prefer tighter consolidation or does it not matter as long as clear support is holding? I always prefer tighter consolidation because that just means better risk reward. If something's got a breakout level of 3 and is holding between 275 and 260 versus 280 and 240, I'm going to get better risk reward buying a trigger or buying near that consolidation. Um, so yeah, I prefer it to be tighter, but it doesn't really matter as long as as far as conviction going that it's going to work and go break out, uh, as long as there's support there and it's holding, it's making higher lows or moving towards a resistance level. That's all that really matters. But in terms of maximizing profitability, shout out David Hanlon. Um, Tighter is better. Tighter consolidation's better.
You'll never let him let that down after naming his presentation that.
Let's see. William says, "What up, guys? Just getting back home. Too bad I sold KZIA. Sick move here in after hours. Is that moving?"
Yeah, it's at it closed at 95. It's pretty impressive after hours. Pretty
Really?
sweet. Yeah.
You
Big
were right. You thought you had to play it during the market hours
big
off
recovery,
that
yeah.
support, and all you really needed. That's a nice eye, though. I think William related it to some other ticker that did it recently. Was it not SNGX? I don't think. What was Monday? Something that pulled back a lot into the close and then gapped up. Maybe it was cost. I don't know what it was, but not my speed, not my patterns. But nice to see it. 55, 60 cents all the way to 95. I don't know how you after hour traders do it, where you're just here all day from
Right.
pre-market
12
to
plus hours.
8 p.m. uh, Fran says, I'm hoping to just skate by in my career without shorting ever. It's possible.
Yeah.
I think eventually you do want the access to shorting because once you learn the bigger picture, um, you're gonna eventually be short biased. Like I don't care how long biased you are, eventually you look at ZAPP and go, that's overextended and it hasn't been read, and you'd like to profit from it. Um, I think that's a good thing though. If you're so not, what's your Twitter profile say? I'm so bullish. I'm so bearish. I'm bullish
So bullish
or
or
something.
so bearish, I'm bullish, yeah.
Yeah, and so if you go into with that perspective of like I only want to short when it's really really good, I think it's really beneficial. But you got to work your way there most of the time by longing, and there's plenty of good longs out there. I think Kellogg is basically only longing right now. Gratani, you see, who used to only short sell and trade OTC breakouts, is playing multi-day breakouts, and swinging these listed stocks. So it's very possible from the long side.
Yeah.
Mhm. Okay, you posted all those. All right, I'm gonna find two good questions left, and then we'll get out of here, right, Kyle?
Sounds good.
Can you guys talk a little bit about how you guys started to scale up once you started to become profitable? I feel like we answer this all the time, but it's gonna be the same answer. Kyle,
Yeah.
tell
Tell.
him.
So yeah, this has definitely become one of the most common questions I've ever answered in the last like month or two. The natural inclination is for people who want to like triple your size tomorrow, right? So if you're losing $100 a trade and you're finding profitability and consistency, like you're like, this is working, let's go to $300 risk tomorrow. You go to $300 risk, you take your first $300 loss, doesn't feel too good. Doesn't feel so good to the point where you're like, yeah, I don't want to do that again. So you go back down to 100, and then you never progress because you're just so scared of that next level, which is a mind block that you think that's next level. When in reality, you need to take it in baby steps, in my opinion. So like instead of going to 300, go to 110. Then after a month or two, go to 120, and then 130, and then 150, and then 175, and then 200. And then 250. Like you need to be taking these small steps, not this massive jump, right? Because like any new loss that you're willing to take, you need to be willing to lose. Well, what does taking 5 losses in a row look like, right? If you risk $100 per trade and you have a losing streak of 5 losses in a row, and you up it to 110, are you going to be comfortable losing $550 after 5 losses in a row? Right? Because if you jump it up to 200 and then you take 5 losses in a row again, because it's naturally going to happen, you're going to face drawdowns at your new higher risk level. You're going to go from $500.
You might not know till you get there either.
Yeah,
You'll know.
Yeah,
that
then you'll
day.
know. It won't feel good. But you're going to go from $500 over 5 losses to $1,000 over 5 losses. Like that's different. That's a whole nother emotional level that you have to build into. So baby steps, I think, is the move. You have to be patient. It's not going to happen overnight. It might take months to even double your risk, but like, I think that's the most effective, right? Slower is faster, in my opinion. So
Slower is faster.
slower is faster.
I love it. Be a turtle. I always say that. I think in trading, you just got to realize like it's such a long-term game, and you don't need to rush it. Like the market we saw this week or last week or the week before in 2022 or 2019, it's going to happen again. It might be tomorrow. It might be in a year. Like there's always opportunity. There's always time for you to go exponential and parabolic on your profit chart. Like, but you want to do it in the safest way possible that doesn't, jeopardize your ability to be here tomorrow. And I think so many people want to size up as quickly as possible. I agree with everything Kyle said. I did it so slow. If you are a 4-leaf Clover and you've been watching my video lessons from December till now, I completely rebuilt, my strategy, not my patterns, but sizing, starting in December. And my most recent video lesson in end of June was just about my sizing goals to get to at the end of the year. I went from $3,000 risk last year to $300 risk this year, and I've been building my way up very, very slowly. So if you want to see how I've been doing it and how it has turned into profits, and what my goals are for the end of the year, make sure to check that out. But slow and steady, like what Kyle's saying, is so real. Like you don't think about it until you're there, and all of a sudden you go from $200 risk to $1,000 risk, and you take 3 losses in a row, and all of a sudden you're like,
You've given back all the consistent
I don't
profits
ever
you've
want to
ever
size
found.
up again. I don't ever want to size up again. And it's
Yeah.
like the slower you go, and the way I do it is like I want to risk somewhere between $300 and $400. Sometimes it's 320, sometimes it's 390, but I'm always safe. I'm in that area. And then so I get used to a little bit bigger than like a $400 loss sometimes, a $200 loss sometimes. Then I just keep moving up 100, 100, 100, and that's my goal for the end of the year. And it's little by little, and you get so used to like all the numbers in that range that even when I size up, I'm still basically losing the same amount. But eventually, in 5 months, I'll be risking 1,000 or 1,200 or whatever, and I'll have conditioned myself to be okay with it. Um,
Yeah.
but yeah, that's sizing. There's no one right answer, but I think most of the people who've done it the right way have probably taken it a little bit slower. And the faster you go can work in the right market, but the second you're wrong and you run into a stretch of losers, you're going to pay for it.
Yeah. The last thing I'll say on this is the famous last words I've heard is, I made a lot of money, I sized up, then I gave it all back.
Right? Because you go from, that's like the same with the gap and craps, right? If it's like the wrong time, you could end up tripling, like doubling your size on those. And in a month, if it's a bad
Oh
month for gap
man.
and craps, give the entire thing back.
Yep.
Sucks, but
Happens.
um, okay. Um, well, I just want to read this one. Someone said Dominic seems like such a nice guy. My favorite Finwit trader. I'll take
Dominic
it.
is a
I'll
nice guy.
appreciate it.
Yeah.
I'm a decent guy. Yeah.
Like you just start letting that one compliment hop you up. Like I am a nice guy.
I am a nice
I'm
guy.
the nicest guy.
Uh, someone's mentioning about how trading tickers is the best, and everyone mentions it. It's true. Fran says, "Do you have any new millionaires yet?" Not that we know of. We encourage everyone to use Kinfo and track their trades, and be able to show your profit chart, or that, or using Kyle's spreadsheet, millionaire money sheets, $1 million money sheets.
Yes.
Over at clovertrain.io, which is what has changed the game for me. I'll tell you what, in terms of tracking, but not that we know of. We have some really, really good students. William Gregory would like you to believe that he's on the way. And I do think he's really, really talented. I'm just messing with him. But we have some great, great students over in there killing it. Randy Walker. I think J Bones will probably do it next. I think J Bones is really, really close
Yeah.
from just taking off.
Where is he at? 600, 700 now?
I think he's in that range, and he's having like a breakout year, like a really, really good year. If he wants to comment and say how he's doing, that's fine. Or if he wants to make a video lesson on it, whatever. But yeah, we got some really, really talented students, and I'm just happy if people are consistently profitable and going from unprofitable to profitable. That's my most important thing to me.
Right.
All right. Anything left for you, Kyle?
What was? I feel like we had a question. Where was it? Let's see. I'm missing where it was. I know there was a question I wanted to answer. I don't know where it went. Something about the 3 and 4 leaf.
Oh, where we skipped it because it was middle of the show. Can you guys talk about cost to join Clover chat room?
That one, yeah. Yeah, so there's 2 tiers. I guess there's 3 tiers, but the 2 tiers that are most popular are either 3 leaf or 4 leaf. 3 leaf obviously will be access to the chat room, the trade alerts, the watch lists. For those main 3, right? You can ask us questions. We're pretty much in the room most of the day, if not all
Access
the day.
to us.
Yeah,
Yep.
access to the room, talk to other like-minded traders, etc. See our alerts, see our watch list, etc. Then there's 4 leaf. 4 leaf has everything 3 leaf has, except then you also get 2 webinars a week from us. All 3 of us. You'll see every one of us at least once a week. So it's either like this week, Tuesday was me and Dom. Tomorrow is just Huddie. Next week it could be me and Huddie and then just Dom, or just Huddie and Dom and then just me. We mix it up. And then on top of that, or no, I was gonna say webinars. The webinar archive, which so like if you've missed the last year and a half of webinars, like you have access to all those. And then also the video lesson archive.
Which is getting big. It's getting beefed up.
Yeah. So, any video lesson I've ever made for Clover, it's in there. I made 2 on 4th of July randomly. I had an extra 30 minutes. I was like, yeah, we're going to bang out 2. Stuff like that. So in terms of the cost, it's like $125 a month for 3 leaf, $250 a month for 4 leaf. So yeah, that's what it is. So
Yeah. And if you want to access clovertrading.io, check either out. With 4 leaf, you also get access to everything me and Huddy did back at our previous business, huddieanddom.com, which is a lot of hours of webinars and virtual boot camps. Not enough people, I'll continue to say it. If you are a 4 leaf and I'm talking to you, we can see how many people are watching the video lessons and the archive webinars. And I remember Sykes used to harp on us as students back in the day, like, no one's watching, whatever. And now I understand it. And I'm like, we're all here. We watched all the stuff. For me, it was trading tickers, not necessarily all Sykes stuff, but it was trading tickers all day, every day. And just until I can basically tell you exactly what Tim's going to say next. And if you can do that with us, you're probably in a good place too. But always can get access to that cloverchain.io. We just finished up our July 4th sale, so I'm not sure when the next one will be. Maybe deer camp season. I don't know what the next holiday
deer
is.
camp season sale. If Dom catches a deer, we'll do a sale.
But Kent's saying it's worth it. I'm green on the month for the first time ever. 3 years of learning, a lot of good traders in there, and they answer your questions without making you feel dumb.
Nice, Kent. Great job.
There we go.
There we go.
All right, but hey, that was nice to be here for Wine Wednesday. Good turnout, actually. Great questions. We got Gratani in here.
Yeah, everyone,
Does it get any better?
everyone, thank Kurtani for popping in. We'll be sure to have him on live officially for maybe either a poker night or just another Q&A. Have him bring some wine, and we'll be sure to do that again. Thanks, Kurtani.
All right, everybody. We'll see you tomorrow morning, 8:45 a.m. for another episode of Good Morning Nasdaq. As always, too, if you want access to all the previous Wine Wednesdays or Good Morning Nasdaqs, you can go to the playlist section on our page, Clover Trading, on YouTube,
Yep.
and you get access to them. Also, if you're not subscribed to the channel, what are you doing? We're 4.84. We're so close to 5K. Maybe we'll give something away at 5K. Who knows? I don't know. But tell your friends, tell your grandma, tell your brothers. Get subscribed.
Get subscribed. There we go. Well, all right, everybody. Have a great rest of your week. 4-leaf and 3-leaf, my watch list will be out shortly. And
Mine
yeah,
too.
we'll see you guys all
Get it,
tomorrow.
Kyle. You're so good, but mine will be out.
I'll let Dom post his first, and then I'll post mine. So, all right, everybody. See you guys tomorrow. Peace.